Welcome to Coffee with the Chair. I'm Teresa Aronson from the St. Lucie County Chamber of Commerce. It is our pleasure, our honor to facilitate this show every single month. We're back in the studio, and I'm not sure if they have a wide shot yet, but there are actually 3 of us on this little stage. Woo-hoo. So proud to be back in our regular format. Please welcome, of course, the Board of County Commission Chair, Chris Sadowski.
Good morning, everybody. Thanks for having me.
How nice is this? We're all vaxxed. We've all admittedly announced we're vaxxed, so no secrets here, and we're very close together, which I kind of like.
Well, I don't know. You bite.
I do bite, but you're a little out of reach, so we should be good. Let's introduce Duwan. We want to introduce our guest today to everybody, so she doesn't have to sit here while you and I chat for a little while. Please welcome Duwan Andrade from the Self organization, and for those of you who are unfamiliar, we're going to learn about it right here now. It is the Solar Energy Loan Fund. Please welcome Duwan.
Thank you very much. No, it's great to be here.
It's great to have you. You and I have known each other for years through the Young Floridian program. Duwan's been a judge for us for many, many years, and I'm sure they've put your name up, and so I'm one of the few people in the world that doesn't call her Dwayne.
Thank you for that.
Yes.
The grammatical rule of a double consonant after a vowel and an E at the end, it should make the vowel sound short. But nobody remembers that grammatical rule, so it's D-U-A-N-N-E, Duwan, but people still pronounce it Dwayne.
They do.
And that only should happen when there's one N. You see, we got to go back to school.
I know.
Right?
I know.
See, we're learning things here at Coffee with the Chair.
And let me just do the same thing for my name, which is Teresa. There's 2 S's. So,
yes,
again,
Teresa,
the I is
Teresa.
short instead of Teresa.
Exactly.
It's Teresa. So I have the exact same thing as
Yeah, well,
Duwan
go ahead and
has.
let's go on to Zadovsky, and let's go work.
Yeah.
Oh, yeah.
What do you do
no
when
way.
you got 6 consonants in a row?
Exactly. No.
And I love the fact that it starts with a D and nobody will ever spell it that way.
That's true.
Yeah. So now that we've got that all straightened out,
Yes.
Tell us a little bit about the Solar Energy Loan Fund. Tell us how it started, and more importantly, what does it do?
Sure, gladly. So just quick intro. I have been with the Solar and Energy Loan Fund since 2013. I am the Chief Strategic and Financial Officer. We are a nonprofit, so we all wear multiple hats.
Yep.
So we all have multiple titles. But basically the Solar and Energy Loan Fund, known as SELF, is a nonprofit community development finance institution. Now that's a mouthful. Basically it's a community bank. And what that means is that we're certified by U.S. Treasury, and we're a mission-driven lender. We are a loan fund that focuses on serving low and moderate income communities. And per U.S. Treasury and per our certification, we have to do a minimum of 60% of all of our lending in low and moderate income populations or communities. That being said, we actually do 74% of our lending in low and moderate income communities. We're really proud of that because that is the gap that needs to be served. So basically that's SELF. We've kind of rebranded ourselves, honestly, from the Solar and Energy Loan Fund, which is a mouthful, to SELF for many reasons, because people think of us like solar energy. People may think we're a solar contractor, a solar vendor, And the fact of the matter is that we have become a lender for sustainable home improvements.
Okay.
And what that means is that we've evolved from the Clean Energy Fund, basically a fund focused on energy efficiency and solar, to embracing climate resilience, sustainable home improvements, because ultimately, we have to listen to the market. And when we started, this program was created by Chris Sadowski and a group of commissioners, and of course Doug Coward, who, by the way, is my husband, and we co-lead this organization now. But they created this concept of a green bank or a green fund, originally to stimulate jobs.
Right. And back in 2008, 9, 10, we obviously were still in the throes of the recession, and the federal government provided a grant opportunity for green energy, trying to help us create jobs in our community. A $2.5 million grant was actually partially written by Doug Coward and our grant staff. And I like to think of Doug and I as doubles tennis players. You know, he served it up and he put the ball in play, and then I was at the net and I volleyed, you know, to actually write the bylaws of the actual entity called SELF. And then now he's out there right now slamming it home. So
Yeah,
Slamming
exactly.
it home
Yeah.
might be an understatement. I mean, you guys have expanded SELF.
Yeah.
Tell us a little, and made an appearance before Congress too.
Yeah, we'll get there.
Okay.
So I'm going to go back a little bit in history because I think it's really interesting. The organization was created by this grant from the Department of Energy. It was the ARA bill. So back then, there was a need to stimulate the economy, much like we are now in that same situation for different reasons. So it was called the American Recovery and Reinvestment Act, bill signed in by President Obama at the time. And that created, basically was aimed at creating these innovative financing models to kind of jumpstart the green economy. And therefore, the focus of SELF was really on clean energy efficiency, and solar. So this started in 2009. It was, I think SELF was created, but 2010, they got the grant. 2013 is kind of when I come on board. The program is weaning off of the grant, finalizing the grant, and the big question is sustainability. How is this organization going to move forward after, you know, deploying $1.5 million of the loan fund and having spent the grant funds for the operational part? And, you know, the thing about those grants is that you have to spend the money in a certain time period. So then it's like, well, how do you continue? And what was interesting at the time is that we were really questioning whether, you know, what the strategy was going to be: expand, diversify, and we kind of decided to do both. So we said, well, in order to sustain the organization, we have to expand beyond St. Lucie County, and we also have to diversify our products. And what was happening was that, you know, when we were talking about solar, the fact of the matter is that serving the low and moderate income communities, people aren't ready for solar. Why? Because they need basic home repairs. So you go out to a neighborhood, there's blue tarps on the roofs. Hurricane, you know, damage is still out there 2-3 years after a hurricane has gone by. And then, you know, you can't possibly talk about solar. I mean, it's the sexy thing. Everyone wants to talk about solar. But you need basic repairs. So you need to fix the roof. You need to weatherize. You need to insulate. You need to do energy efficiency. You need to reduce the demand. Once you're there, then you can go solar, right? So what we found is that the market really needed these basic repairs. So we decided to diversify and embrace climate resilience. So fortified roofs, maximum wind resistant roofs. So then we started doing roof loans. Then this market is, I mean, this is Florida. A lot of elderly people aging in place, people with disability. So then we expanded to embrace disability adaptation. So basically now we've become SELF, the home improvement lender, and our slogan is easy loans for improving homes.
Easy loans for improving homes. So you can make an argument that anything that is improving something in a sustainability way would qualify for the loan. That is
Yes.
kind of the long and the short of it. So-
Yeah, it's kind of like anything that's part of the structure. So we don't do appliances that you can
Right.
remove, refrigerators and all that. But AC, solar water heaters, air condition. Mostly we do high efficiency air conditioners,
Right.
roofs, impact windows, hurricane shutters. And that's like the core of it, you know, disability adaptations here and there.
And what's the
that's-
advantage of going through SELF rather than a typical lender or your bank or your credit card or you know?
Being able to actually get the credit, that's another part of the
Yeah,
process,
that's an
you know,
important
so-
piece.
So one of the things that we did in 2013, and this is part of the work, you know, that you were still the board
Chairman of the
chair at the
board, yeah.
time. And one of the things that I took on as, my responsibility, and kind of based on my background in microlending internationally, is we took our underwriting method and we created our proprietary method based on ability to repay. So we don't do lending based on credit scores.
Okay.
We don't do lending based on incomes. We do lending based on ability to repay. What that means is that anybody with 0 credit score, with 500 credit score, or with an 800 credit score can get a loan from us. What's the difference? Difference is that, number one, we will look at that person holistically from a financial perspective. We do pull credit, so in our loans, with our loans, you can advance your financial inclusion, meaning somebody with 0 credit score can actually build their credit. Somebody with poor credit score can rebuild
Improve
their
it.
credit. Second thing is that our rates are about 1/3 of what anybody with a similar credit score would get. And we kind of turn the banking paradigm around, where the people that are the poorest and with the least credit score actually pay the least. So the typical, banking paradigm is, if you have a low credit score or low income, you're higher risk, so you're going to pay more. So your interest rate's going to be, 23, 26%. If you have a 500 credit score, you won't get a loan. So you have to go to a payday lender, and then you're paying 40 up to 400%, right?
And here's a good time to actually
Yeah.
chime in, and the fact that, when the individual comes in and meets with the staff itself, they walk through exactly what you're talking about. What is your ability to pay? They put it all on paper and they say, okay, we got this, and this. And then they work out the details. But the interesting part about that, and you talk about those folks who are the most in need, paying the most, it's ludicrous.
It is.
But the way this works out now, you actually start to build your credit. But then, when you look at the scores, less than 1%, probably less than 0.5%, have those loans failed. All of those folks tend to be incredibly responsible at making those loan payments back.
Yeah.
So-
In fact, the numbers speak for themselves. We've done $18 million in loans. Average size loan is $10,000. 74% are low and moderate income. 54% have less than 640 credit scores, and we have less than 2% default rate.
There you go.
They're unsecured loans. So credit score doesn't really matter. Ability to repay. Financial inclusion. We also do project management. So when somebody comes for a loan, not only will they get a very fair price, but we will walk them through the process to what you were saying. We look at what they need. We advise them on what's most cost effective. We work with a network of contractors that are pre-vetted and approved.
Right.
Let's
Yes.
stop right there for a second, because that's so important.
Yeah.
A lot of folks get taken in by unscrupulous contractors.
Yes.
There are a few, right?
A couple. I
So-
don't know any of them,
No,
but there are a
but the
couple
fact
out there.
is that they are out there. You'll sometimes see all of a sudden a neighborhood gets hit with these flyers that said, oh, solar, get this, or get your windows, and basically they come in, they hit a community, and then they get in and get out, and they don't do the work appropriately. So having the vetted contractors is incredibly important
Yeah.
for, number one, success of the individual, success of the loan. So that's
Yes.
so very important, and
Yeah.
having that backstop
Yeah.
and having credible people who actually are doing the vetting is very important, because Self and their staff knows how important that success is. Because if it fails, if the roof fails, if the windows fail, the air conditioner fails, they're going to have a problem collecting those funds. So
Yeah, and
It's-
go ahead.
I'm just saying, for our viewers, they need to realize that this exists. This is a resource for them, because
Absolutely.
I think that unless you're dealing with a contractor that is contracted with Self, they don't bring this up. They all come in with their own lenders in place. Typically, they work with a bank, and those interest rates are more than likely going to be significantly higher
Yeah.
than what you're going to get through the Solar Energy Loan Fund.
Yeah.
And you'll be able to hook them up with a contractor as well.
Yes, no, that's a great point. So a couple of things related to the contractors. One is that contractors can expand their businesses by becoming affiliated to us. So the first thing is, anybody out there watching, if you're a contractor, it's free to join. You have to go through an application process. We will verify licenses, insurance, We also are going to check references. So, there's a whole vetting process. But once you're with us, then you can go into neighborhoods that otherwise would not have had the financing available to do projects. So I'll give you an example. One of our hometown contractors, Seacoast Air Conditioning, local mom pop shop, now is growing, has done over $1 million of projects with our financing. In fact, we're teaming up with them to co-market. We can do this with, we have many other contractors, and I'm sorry I don't have time to mention, but we actually have close to 700 contractors in our network right now.
Oh, very good.
But they're statewide.
Quick story. When we were in a recession, all the contractors were just really having a hard time. Yeah. And, the Seacoast came to Self and basically said, hey, well, how can we help? And literally, we probably saved that business back in the 2009, 10, 11 area. And they have embraced Self.
Yep.
They've embraced the possibility, and so now they are probably one of the best advertising agents for Self.
And what is funny and coincidental? I think it was 2009 I got a Self loan.
Yes, you are a client.
And I did my air conditioning with Seacoast.
How about that?
Yeah.
Yes, you
Full
are
disclosure.
our client.
Full disclosure,
And
I was one of the very first,
the very
I think.
first.
And back then, I don't even want to tell you what the interest rate, but it was unbeatable. I think it was, because you became more and more and had to get a little bit more competitive in order to sustain yourself. But I think I got in before the sustainability was on the table because my interest rate was ridiculously low.
Yeah.
But I was one of the very first clients, I think.
Yep. So 2011, there was basically there was very light underwriting, and it was grant dollars.
Yeah.
So a lot has changed. We're still, like I said, about a third or a fourth of the cost.
You definitely
comparably speaking. But then you have the project management. So now you have the contractors that are pre-vetted, but what do? We approve you for a loan based on ability to repay. So let's say you have a 500 credit score, but you own your home. You're on fixed income. You have the ability to make a small payment. Nobody will give you credit. You come to us. We give you the contractor list. You choose. We don't tell you who to use. You have that power to choose. Then what we do is we say you can repay a loan of up to $12,000. So then you kind of back into that. Okay, I need a new roof, so you go out shopping for a roof within that budget. So then you find your roofer, or if it's a roof, and then we make sure that roof gets done. We don't pay the contractor until they're done. The person never actually touches the money, right? So what we do is we approve the loan, then the project gets done, we check inspections, we make sure, so there's two things. We're protecting the client, and we're also protecting the contractor, because the contractor may have gotten a 30%, a payment, but then the project's done, and they may run into the client saying, "Oh, I don't have the funds anymore."
Right.
So what we do is we really make sure that both parties are happy. So we call the client, make sure that they're happy, check inspections, then we pay the contractor. Now everybody's happy. Yep. The person's building financial inclusion. They've improved their quality of life. They are safer. The contractor has now created a new job, and it's a win-win-win. So that's why we are a triple bottom line impact model.
And
we'll add one more to it.
okay.
Yeah.
We all have so much to say today, but we are running out of time.
Yes, PACE.
Okay. Yeah.
Property Assessed Clean Energy Loan Process. And again, it goes beyond just the clean energy side. So Self is the agent for St. Lucie County's Property Assessed Clean Energy program. And what that is those who have value in their home can use their home as the asset to go forward with a loan. So
Yes, so that's a program based on equity, and it's also for commercial, new construction now as well, rehab, and also residential. And I just want to note that we, and you, and thanks to your leadership and the board, the St. Lucie County PACE program, residential, is one of the few and the only one in Florida that actually has incorporated ability to repay to ensure protection for customers using PACE.
And that's an important statement because there are, again, back to those who are unscrupulous, who actually will come in and say, oh, well, we can do a PACE loan, or a property assessed clean energy loan, and give you roofs and windows and so on and so forth, and you don't have the ability to pay,
Yeah.
ultimately they're going to take your house. And that has happened. There's been several situations. I'm going to say California is probably one of the, Arizona,
Yeah.
some of the other states around the country. But the safety provisions that have been placed in SELF have been so incredibly important to the customer and to
Yeah.
protect their home and their value. So I think that's
Yeah.
important to say today.
And as we discussed here, I was a self client. It's for everybody.
Yes.
You do 70% low and moderate income, but this really is for everybody.
It is.
And I would say those of you that maybe aren't in that demographic but want to make sustainable improvements for your house and for the environment. Go to SELF. Go to SELF, check them out, see what kind of things they incorporate, because I think windows are a huge part of energy sufficiency.
Yeah.
These structural things that you can do to your home are really not just good for you, your pocketbook, but they're good for the planet. So I would encourage people to.
And to talk about how SELF has morphed. They are also the agent for septic to sewer
Conversion.
Conversion, okay.
So that's really important.
In the county, because in the city of Port St. Lucie, they have their own septic to sewer conversion. Is that correct?
Again, it depends on whether or not they can meet the funding side of it. So SELF actually has, I don't know how many places you have now, but they are working with Martin County on their septic to sewer program.
Perfect.
And so, as St. Lucie County begins to roll out our programming, it'll be important that we have this asset available to us.
Yeah, so we're
additional
able
funding.
to finance today, if somebody wants to connect to sewer and doesn't have the ability to have the upfront funds, they can come to us and we will finance that connection.
And that's important in our community in St. Lucie County. That is very important if you live in, depending on what you're hooking up to. If you're living in the city of Port St. Lucie, they have a program which it has added no interest to
Right.
your bill,
Right.
your utility bill over several years. Now it will increase your bill. I'm not going to lie, significantly, but it's a no interest. So they do have a program in Port St. Lucie. But we have issues with septic to sewer conversion
Yes.
throughout the county, throughout the other city, our sister cities. So this is an alternative to
Yes.
a one-time initial cost, because it can be quite costly to.
And it's coming. We are all going to have to be connected to sewer.
We will.
Because what we're doing to our lagoons, our rivers, and
Yeah.
waterways is incredibly terrible.
Yeah.
So leave it at that.
Yeah, and I think that SELF is really good at working with local governments and partnerships, and St. Lucie County has been a great partner. I think your investment, we've leveraged your investment like 100 times.
At least.
Yeah.
It's like, there was we've always had the support, but there was a small grant over like 3 years, total of $75,000, and we've raised $25 million so far. So.
I want to tell everybody at home, because we are running out of time, and I know that your husband is going to be doing another show, so you'll
Yes.
have 2 opportunities to
Yes,
learn
to
about
hear.
SELF this month, and we didn't cover everything today.
No, there's a lot.
There's so much. So hopefully, and you're working with Doug on the next show, so you'll know exactly what points we didn't cover on this show. So I'm going to say, make sure you watch these as a dual package this month.
Well, that's how we get the audience to come in. It's a tease here. It's a coffee with the commissioner.
Because there's
it's
so
coffee
much
with
more
the
to
chair.
tell. We're just a little bit out of time. So I think we're going to take a break, and then Chris and I are going to come back and talk a little bit about some county things that are going on. And because we're supposed to keep it to a half an hour, but I think that ship sailed. And but
We haven't been together in
we
so long.
haven't.
This is a celebration.
I know.
Well, didn't you want to talk about how SELF is a national model?
Well,
when
we're
we
going
went
to talk about
Congress?
that on Inside St. Lucie, I think. With
We got to get back to it real quick
Well-
because
But Doug didn't go. I'm the one that testified,
Yes.
so I can talk about that now.
okay, but we
you
are
want to.
just about out of time. So touch on it.
okay, well, we have a celebrity in our groups
Okay.
amongst us. Dewan actually, SELF is a national model, and she was asked to testify in front of Congress. And I'm just going to let you go ahead and take it from there because I think we're under the gun on time. So
We are.
you can be concise and brief too. But this
Thank
is the
you.
important part that I wanted to share.
You,
how important
this is
St. Lucie
bragging
County
rights,
is.
and she wants to get that in, so I agree with
Yes.
you. Let's get that in, because people should know.
Well, I think people should be proud of, St. Lucie County should be proud of this model that you've created, because now we are a national model of a green bank. We're Florida's green bank. And as such, we were invited to testify on the benefits of the National Climate Bank Act. It's Senate Bill 283. That's part of the infrastructure bill that President Biden is about to pass. And what that means is that there's $100 million for a national climate bank that would use green banks such as ours to channel funds, low-cost, flexible, long-term capital to make our communities greener. And SELF and the Coalition for Green Capital, which represents all of green banks, were invited to testify as witnesses to the benefits of that. And the reason being that SELF is a unique national model that is being looked at to replicate across the nation as a green bank that serves low and moderate income communities. So, you know, I was just honored to be considered, I guess, a national expert in these issues,
Right here in
and
St.
be
Lucie County.
representing St. Lucie County. So there we were.
I do remember when
yes.
you and Doug was on the commission at that time and started talking about this this sort of program and put it together, and it has grown and grown and grown. So
Yeah, we were
right here.
had awards from USGBC, the United States Green Building Coalition, and you know, we had a number of awards for that, and we were a gold standard county for all the efforts we've done from the green side too.
Yeah.
So, but I just want to thank you.
No,
just
thank
the
you.
fact that you represent St. Lucie County in Congress is huge. And I'm
Well,
so proud
thank
of
you.
it.
It's a pleasure. I'm very proud to do
And an
so.
organization that came from St. Lucie County
Yes,
is
exactly.
now the model, probably the international model for this sort of program.
Thank
All right, how do people get in touch with SELF if they're interested in maybe exploring a loan with you, exploring some, you know, these are all capital improvements to the structure
Yes.
that will help with sustainability. So
Yes.
that's what they need to
And-
know.
yes.
If they're unsure, they should
Solar
call and
as
ask
well.
you.
Absolutely. So the best thing is to go to our website. So we've made some really great investments on our website. And you can do everything online, www, it's a little bit long, solarenergyloanfund.org.
Okay.
And you know, there's all sorts of information there, but the process is easy. Everything's online, quick.
Good.
And yeah, there we are.
Very good. And I'm sure you still will find many, many things to talk to Doug
Absolutely.
about
Oh,
on the next show.
Oh, yes.
So thank you for being with us
No,
today. We
thank you.
appreciate it very much.
Thank
And
you.
Chris, you and I will be doing, don't go anywhere though. Just,
Oh, I'm
just-
there.
yeah, just
Oh,
stay
okay.
right there. Yeah. So, and Chris, you and I have many, many more shows to do
We do.
together. So we'll explore a lot of things going on here in the county, but we'll get back to it next month. No problem.
It's just funny because we sit down and we're not sure what we're going to talk about, and then we have no time.
And then
We-
it gets
we
away
never-
from us really quick, right? I don't know if that means we're just chatterboxes. That could very well be what it
There's
is.
a lot of things happening. This is a
There
great
is a
time
lot
in
of
St.
things
Lucie County
happening.
in this world. So
And yeah, next month we'll tackle some of those big issues.
Okay.
And some big wins. Got some big wins too.
Absolutely.
All right. I want to thank everybody for joining us, everybody here in the studio. I want to thank A&G Pools, who is our sponsor of this show every single month. Art, Sandy Allen, Travis Leonard. Couldn't love those three anymore if I had to. Such great community partners. So, but as you may expect, with a negative housing inventory,
Yes.
they are very busy building pools today.
How
So
about that? Yeah.
I would love to see Travis out digging a ditch for a pool, wouldn't you?
He'd mess up his shoes.
But thank you, everybody. Thanks to Mike and Stefan in the studio, and of course our guest today, Duan Andrade from Solar Energy Loan Fund, or SELF as they prefer it now, and of course Board of County Commission Chair Chris Sadowski. Have a great day, everybody.